Hi, this is Acme with the Bulletin Board Heroes here at Box Markets for Monday, the 3rd of October. Starting off as usual with the Ftse 100, where you probably want to look away actually, but here we've got a situation where we had that resistance coming in around 69.70, that old March support line became new resistance, and now we're really trying to establish a foothold above the 6800 level, the old support there around 6830. So just holding above that at the moment. Hopefully we'll have an end of day close above that to get us back to the 69.70 area. On the positive side, we've got the RSI now in the oversold territory, so below RSI 30. That tends to be a buying point for leading UK stocks. May not be that on this case, but can't rule out a move down to that lower March parallel as low as 66.70 before the worst of the recent pain is over. You see the MACD line still wide open, so that does allow for at least one more leg to the downside, even if we then go and reverse higher after that. Moving on to the situation at Bitcoin, and here we've got the old problem of support and, well, now sort of almost like support and resistance in this trading range that we've got either side of 19,000. 18 to 19,000 has been the support area. We've had failures at the top of that falling November trend channel. RSI uptrend line is maybe stalling the any fresh decline, but has to be said, it still looks as though 18,000 could break, and then we may get a move into the mid-teens, i.e. 15,000, 13,000, something like that on the next leg up. The reason for the relative pessimism here is that we've got the 50 and 200-day moving averages both falling, and we've had two failed attempts to get back above the 50-day line, now around 20,300. So failures at the 50-day line, we've had multiple ones, so that does give us a rather negative look here and suggests that the next move here could be down, although obviously we do have that potential savior in a break above that November resistance line. That's around 19,500 at the moment, but still range bound. But when you're in a range like that near the low, the risk is of a new move to the downside, not really to the upside. Moving on to pound dollar, which was a bit of volatility today, but the idea of while we're above 110, we're looking to 116 or 117, still just about in place despite the U-turn by the government. We've got on the 45 pence tax rate. We've got a buy signal on the MACD, so those lines have crossed higher. Maybe that's a good coincidence for this market, and that just gives us that little channel between 110 and 117 at the best. On the basis, perhaps on the fundamental basis, that the most of the tax cuts remain in place, and tax cuts normally good for growth, although that's rather a controversial thing to say at the moment. Moving on to the stocks, and starting off with the stock which I covered for the first time just I think a few days ago, if I can get the right ticker or the right stock to appear. Argentex, here we've got situation where we broke a resistance line there in the around the 85-90 pence area, and we've had I think news from the company today, hit the top of that channel around 107, come back a bit, but at least the charting worked there for that particular situation. Now it's a matter of seeing whether old support around the 94 pence area will come in to save the situation and allow the shares to go higher still, but at least that momentum move with the unfilled gap to the upside and then the trend line break, the charting did work there on that particular situation. Now on to Angus Energy, where there seems to be a bit of a kickback for me over the weekend with the comments made, but the technicals here still show that we've got the support coming in between the 50-day moving average and 2 pence. That's been the case for the best part of this month. And the longer we stay above 2 pence, the greater the chance of a move back to 2.8 or 2.9 pence over the course of October. Let's see if that pans out without too much controversy. Moving on to Blenko, and an update from the company today. Seem to be getting into bed with the Chinese, which is interesting. We've had a gap to the upside off the lows, which is impressive, through the 50-day moving average as well, around 3.4. If we can get an end of day close above that, the initial target here up to 4 pence at the 200-day moving average, that's been resistance for the shares since February. Best case scenario target by the end of the year, if you're a fan of the shares, is that we get a weekly close above the 200-day line and head up to 6 or 7 pence, but early days yet. So the plus point there, though, or the plus points actually are the two gaps that we've had over the last month. First one in September, and the second one to start off October, and bouncing off the oversold RSI 30 area as well. So maybe Blenko finally has a low in place. On to e-Therapeutics, which doesn't get much airtime anywhere, but that's what we're here for. Here we've broken a line of resistance there from December. That was around the 18 pence area. Above that, looking for the 200-day line at 25 pence. Maybe if you're cautious, you wait for an end-of-day close above 20 and a quarter pence in the 200-day moving average before assuming that the worst is over and that we are ready to head to the upside. Best case scenario target here, maybe over the next 4 to 6 weeks, would be a move towards 29 or 30 pence at that March resistance line projection. There's been a bit of a rehabilitation for shares in Guild Esports. Here you can see that we gapped through that resistance line there from January, and also the 200-day moving average. We've tried to fill that gap, but unsuccessfully, which is great, which is good news for the bulls. And above 2.1 pence, the floor of that gap, looking for a retest of the 4 pence area, perhaps as soon as the end of this month. Moving on to Igas, which has been helped along by OD News. Did cover the shares, I think, at the end of last week on the basis that they bounced off that line of support there from June. Maybe the OD people saw that as well. And in fact, one would have thought the shares would be a bit higher than they have been so far, but nevertheless, still looking for 70 pence or so in the 50-day moving average, while we hold above 50 pence, which was the call I think I made last week. Moving on to Rambler, which has had a bit of a difficult time of late, but the idea that this is also bouncing off the floor of a falling trend channel from November seems to be working so far. We had the shares really oversold with an RSI under 20, and we also have a MACD indicator just about to cross. Maybe it'll cross tomorrow. Probably want to see price action above Friday's high, above 7.5 pence, above 7.5. We could get at least an intermediate rally back up towards the low teens, maybe 13, 14 pence in the approaching the 50-day moving average. But obviously that might require some fundamental input as well. Good to see Rainbow Rare Earths back in the picture as well at the moment. Here we've had a trend line break, which we had on Friday. That was around the 11 pence level. Gap through the 50-day moving average, which is now rising today, which is very healthy. Suggests that the minimum on the upside should be up to 14 pence over the next couple of weeks. Best case scenario target over the next 4 to 6 weeks up to 17 pence off the back of this bear trap gap reversal. And that would take the shares to back where they were back in, I suppose, the beginning of March, something like that. But above 11, looking for 17 by way of 14 on Rainbow. Sosander is next, another stock which only gets periodic coverage around here or anywhere else, actually. Here we come off oversold territory, rather, just below 20. Gapped up today, so it's a bear trap gap, and that could suggest that we head up to 19 pence at the 50-day moving average, which has basically been the resistance area for much of the past year. Upside value while we hold above Friday's low at 14 pence. Moving on to another relatively rare stock to look at, got Srt Marine Systems. A very interesting situation here that we gapped higher earlier, well, in the middle of last month, came down to fill the gap, which we did almost exactly at 26 pence. And above 26 pence, looking for the 200-day moving average at 35 pence over the course of the first half of October, and maybe even sooner than that. But that bear trap gap reversal looking very healthy, especially while we're above 26, 27 pence, as I have said. Moving along to a stock which has had a lot of coverage of late, Touchstone Exploration. Here it looks as though we've bounced off the floor of the rising trend channel from back in March. That was around the 69 pence level. What we'd like to see now is an end-of-day close or a clearance of the 50 and 200-day moving averages up to 84. If we can get that, it could open the way for a retest of August resistance at 110 plus sometime by the end of November. But early days yet, maybe one would wait for the 50 and 200-day moving averages to break before getting too excited. One of the stocks which looks as though it really does want to move much higher, and we've had the setup here. Bear trap gap reversal, unfilled gap off the low, which is one of the strongest signals you can get through the 50-day moving average, which is also rising. And the good thing about the price action now is that we're holding above 0.22, which was the initial September peak of this V-shaped bull flag. And that means or suggests that 0.3 is pretty much nailed on for this situation. And I suppose we've got to look back and see what the next level of resistance would be, and that really would be in the 0.4 pence area, which was June 2021 resistance. So holding above 0.22, looking for 0.3 and then 0.4 maybe by the end of next month. But looks like a very strong turnaround there with that unfilled gap to the upside. I call that the rocket launcher, and I think that's probably a fair description of the setup that Tertiary has at the moment. On to a company that I interviewed this morning, Tirupati, and it looks as though it's tentatively trying to break above the line of resistance that we've had there from basically last autumn. I suppose if you draw that line more accurately, we are still trying to break that line there around the 40 pence level. Break of 40 could take us up to that October or 1-year resistance line there at 65 pence, perhaps by the end of next month, especially after that little bear trap that we had on Thursday below 34 pence, which was the initial September low. Finishing off with a company which had very decent update in terms of the fundamentals, I think just the other week. Here we've got another Tirupati type staged break of a trend line. So breaking and then trading either side of it. But good support there at 122 at the 50-day line, and then hopefully at the end of day close above the 200-day moving average at 131 will take us up to that February resistance line projection at £1.50, hopefully as soon as the end of this month. Nice support there in the RSI window, almost exactly at RSI 50, which is tends to be a decent leading indicator on upside. And once again, just for technical analysts and chartists, we had an unfilled gap to the upside off the low, a bit like Tertiary, and that can be a very strong signal indeed, sort of suggests that the bears have been caught short, and there's only one way to go. But let's see, as long as we're above 122, then one would be calling the 150 area. That's it for me today. More updates tomorrow.